Kevin Hincks is with me, co-host of Fast Market Live at the CBOE. Everybody's in there, piling in there, getting ready for a busy day. I think that after we had 9 days of gains, 2 days of selling, and we're starting off in the green today. Are folks talking about the China news, Fed Day expectations?
I think, good morning, Nicole. I think the headlines overnight, and remember, we are a headline-driven market. The headlines overnight were pretty solid, like Scott Bessent, who, by the way, will be in front of the Senate today, day 2 of his testimony. Then he's heading to Switzerland this weekend to speak with Chinese representatives. That's a good first step because, remember, the U.S. have been going back. Are we talking? Are we not talking? Well, it sounds like an official meeting is being set up between the U.S. and China. That's good progress there. Also, the headline is that talks are heating up between the U.S. and the U.K. on steel and car imports and tariffs on those. So those talks look like they're moving along. All that being said, China stimulating their economy has got some of their markets up, and of course, the Fed coming up today. The second half of the trading day is going to be dominated by Jerome Powell and his comments. Now, it has a setup, Nicole. I hate to burst anyone's bubble, but this has the setup to be maybe a yawner in terms of a Fed meeting. They're not going to move on rates. The question is, what is Jerome Powell going to say? Is he going to do what he normally does, which is give information to the markets that they generally like? Or is he going to do what he did at the Economic Club of Chicago 2 weeks ago and talk more harshly on the overall market and tariffs and growth and inflation? So that's what we're dealing with as we start the day. We had some mortgage apps that were up, let's call it 11%. Every number was up 11%. Frankly, it looks fake to me that those numbers are all 11%, but the mortgage apps were positive. Earnings were good. You and Jenny are going to talk about Disney, pretty solid earnings there. Here's the thing. Hey, consumer sentiment. Hey, consumer confidence. Look at Disney's earnings. Does that consumer look scared? Doesn't sound like it. That's pretty solid, hard data from the U.S. consumer. So I think we've got some good news today to start the day, but Jerome Powell is going to dominate the second half of today, Nicole.
I mean, this is like a lotto number, 11, 11, 11. I mean, it's crazy.
Yeah.
I see what you're saying. I see what you're saying. It's sort of really interesting. We don't normally get that in that way. I was going through, as I was traveling on the train, and I was going through some of the screenshots that I take when I'm working, and I was looking at some of Jay Powell's comments, in April, and just, of course, once again, about the inflationary effects of tariffs may be more persistent. Oh, that was like one to the markets. But, while he tried to give some positive spin on the labor market, which appears to be solid, we may find ourselves in this scenario with tensions and, can't have a strong labor market without price stability. He was just saying, I was going through some of these, and it just felt like the uncertainty was there for him, and I'm very curious. It's not going to be a yawner today because I'm anchoring that show, first of all. And second of all, I can't wait to hear the language.
That's exacally right. Yeah, you're going to provide the excitement today, Nicole. Jerome Powell may not. He might. Remember, the question is, does he go more into speculation? For years under the Biden administration, he stayed away from that. He said, we're data dependent. We're going to look at the data and then we're going to decide. What he did at the Economic Club of Chicago was not that. Let's see if he goes back to the Jerome Powell that we know and love and talks about the strength of the U.S. economy, the lower inflation numbers that we're seeing, and the fact that maybe he can cut rates as we get to the second half of the year. That's what the market wants to hear, Nicole.
I think about the mortgage apps. That's good news when you say higher. I mean, the pending home sales last week were impressive, right? It sort of surprised folks with that. What we're not getting is walloped with terrible news constantly, particularly hard data. And the earnings today seem a little prettier, at least in part, right?
Yeah, I mean, Disney that you're going to talk about with Jenny, solid numbers, U.S. consumer outspending. Remember, Disney is not a consumer staple, Nicole. That is pure consumer discretionary, and the U.S. consumer is out there spending. Now, we also got Uber that is down only slightly, but that stock had rallied significantly into their earnings, so that's pretty much expected. AMD is slightly higher on some beats. That's good news. Supermicro is lower. I think that company may be a little different story than the other companies in that sector. But all things considered, we're moving along here. And like I said, we're still going to be a headline-driven market. President Trump meeting with the Canadian Prime Minister yesterday was good, positive talk. I think those things are easing the tensions. We still have a 24 VIX. We're still building in about a 1.5% move a third of the days. So it's not like volatility is low. It's still elevated. But all things considered, earnings have been spectacular. Hard economic data has been spectacular. It's the sentiment data and maybe Jerome Powell that's holding back this market.
And nobody's really talking too much about India, Pakistan right now. I guess it's not a market moving event. It's not, while it's a headline in my mind because you don't want geopolitical tensions of any sort, it's not really the making news story, but of course we're aware of it and following it. The meeting with Carney and Trump seemed productive. And there's a lot of love there. It's sort of passive aggressive, but sweet. All right, Kevin Hincks, good to see you. Thank you.